Dating app Grindr getting some love from Wall Street with several upbeat coverage initiations in recent days. Among those, Citizens JMP Securities, starting out with a Market Outperform rating on Grindr. For more on what's making this an attractive opportunity, let's get to Nick Jones, Citizens JMP Equity Research Analyst. Nick, it's great to see you. Thanks for being here. What has been interesting to me in some of these initiations, yours included, is that the Grindr customer base seems like it is more perhaps loyal or has more potential than sort of the bigger dating pool, if you will. Can you talk us through your call?
Yeah, I think that's right. The LGBTQ community, and this app really focuses on gay men, has largely been underserved by mass appeal dating apps, even if they're casual dating apps. So this app specifically is a place where these folks can find a community that otherwise was difficult to find, whether it was on Meta, on Facebook or Snapchat or Instagram or TikTok. Over the years, this has kind of been a ubiquitous platform for the LGBTQ community to find each other, connect for dates, and people even stay on here as friends after they've connected on the app. So it's a really compelling brand within kind of the online dating and even to a lesser extent, social media landscape.
And Nick, you look at the stock, it's had a nice run. It's up about 70% here over the past 12 months, but you must think valuation still looking attractive here?
Absolutely. I mean, they're growing revenue 100% faster than the next closest dating app. Their profit margins are industry leading. They are under-monetizing their user base. If you think about monthly active users on a dating app, often about 15% of those get converted into paying users. For Grindr, they're only at 7% today. So they could double that just on the current user base, let alone their ability to continue to grow the user base in the U.S. and internationally. So we think there's plenty of levers for them to pull to continue driving revenue growth and being quite profitable.
It is interesting. We recently spoke with the CEO of Grindr, and he talked about this idea of expanding sort of beyond dating, right, and offering some other services. What do you think is promising on that front?
It's really early to say, but, they've gotten a little bit into kind of fitness and healthcare. They're constantly adding kind of health awareness type features, whether it's for HIV awareness and things like that. I mean, I think the sky's the limit. I mean, what's important for an online business is to have a highly captive audience, and Grindr has that. So I really think they have a lot of options, and they're in the driver's seat with this audience.
And Nick, do we have any kind of line of sight into what this company's plans are when it would come to AI? Do we know there? They certainly have a ton of data, Nick.
Yeah, it's really early to say what's going to come, but every company is deploying something, whether it's going to help with improved or better matching. For dating apps, deploying AI and improving the safety on the platform is always a focus for all dating apps. So I think they're going to deploy it all over the place. Most companies, what we've heard, are really focusing on internal processes first, really before they get comfortable pushing things out to consumer-facing solutions.
And Nick, final question here. So you initiate, you're a fan. What are the risks to that call, though, that viewers should think about?
Well, the stock does have relatively low liquidity relative to kind of maybe the largest stocks out there that everyone's familiar with, the usual suspects, FANG. So relatively lower liquidity. But outside of that, we view this as actually a pretty strong company here. You don't see many companies growing over 20% revenue growth with north of 40% EBITDA margins, whether it's SaaS or in internet stocks or e-commerce. So we think there's relatively low downside here. Really with just their ability to execute on improving monetization, driving payer adoption, et cetera.
Nick, thanks so much for joining us today. Appreciate it.